Hey everybody, welcome to the live stream. Got a lot of big news going on in the world of student loans. Here to answer some of your guys' questions as well. Looking forward to it. This is the first time we've done a live in a long time. I know that there's been a lot of questions out there from you guys. So really looking forward to it. If for whatever reason you guys can't hear me or the video is not working or whatnot, just put it in the chat box. We'll be sure to hit it up, make sure that everything's working okay. Yeah, let's jump right into it. I got some questions throughout the week that I'll be touching on in a minute, but I want to give you guys some background because there's some extreme confusion, especially because there was an announcement that came out yesterday. With actually it was on the 18th, so 2 days ago, about the 8th Circuit Court of Appeals. What does it mean to save? What does it mean to PSLF? All this type of stuff. But I really want to dive deep into why is this all happening right now? Okay. And you actually have to go back all the way to like 1993. Okay. And that was when they came out with the Higher Education Act. And in that act is the statutory language for income contingent repayment plans, ICR. And in that, the big thing that you need to know is that there's no language in that for loan forgiveness. So it doesn't say anything about cancellation at the end of 25 years. It doesn't say anything about any of that. Whereas if you actually fast forward a number of years, actually, before I go to that, there's some stuff in the language that says that the ed or the ed secretary is responsible and gives them some power to make some changes to the plan. So like the years, all that type of stuff, that power is in there. Okay. Now fast forward to around 2007, 2008, 2009, and Congress passed public service loan forgiveness underneath President Bush right before he left office. That language in that HEA or the Higher Education Act actually explicitly says that after 120 months qualifying at a nonprofit, your loans are forgiven. So PSLF is not even in question. That's in the law that is stated. And same thing with IBR, income-based repayment plans. And so then from there, what happened was that you go fast forward, and President Obama wanted to roll out his own plan. And instead of going through Congress, he said, well, the HEA grants me the power to change whatever I want to on these. And so he rolled out pay as you earn. And then I'll go probably more into it a little bit later on, but then he rolled out repay for certain reasons. And that was that. Then when President Biden came out, he rolled out save. Now, all three of those plans, pay as you earn, revised pay as you earn, and save, were all done through the HEA Act based on their interpretation of it from back in 1993 and the regulations around ICR, income contingent repayment plans. IBR and PSLF, again, were passed by Congress. So there's no question marks there. Okay. The reason why that's important is that when they go to challenge save, what the judge ruled in the lower court was that he was going to put an injunction on it because the act in 1993 did not say anything about specifically about loan forgiveness. And that also then applies to pay as you earn. And it's like, well, wait a second. What happens if I'm on pay as you earn for 20 years? That's what the judge was questioning. So on the 18th, that went up to the 8th Circuit Court of Appeals. And from there, it basically, the judges all said unanimously, yeah, the injunction's correct. This is a legal injunction. And so really what was determined on the 18th was save's not coming back right now, probably never going to come back. It's going to go to the lower courts to decide. And so, like I said, we pretty much know that save is gone. But the big question is, what's going to happen with pay as you earn? Now, what's happening then, I'll talk about what happens next. But with pay as you earn, the big issue there again is loan forgiveness. And now what's coming up next is for them to go back to the court, and this is what normally happens. It goes back to the lower court. They go in, they argue, hey, is this legal? Is this not? And then they make a decision. And if that decision is then challenged by either party, it goes to the Supreme Court. But this is an awkward situation because the original administration and the Department of Education heads that were originally arguing for the government was the Biden administration. They're not there anymore. So now that this is going back to court, who's going to fight it? And if it's not fought, what's going to happen? So there's a lot of question marks around this. Now, those of you that follow the channel, you guys will know I put out a video a few weeks ago where we were saying, like, look, if you really just want to have like definite, yes, I'm getting months counted towards forgiveness, you can go on to IBR, income-based repayment. We know that it counts. You're in good shape. A lot of you have been trying to do that for the last 6 months and you're stuck in forbearance. So the loophole around that is to actually, you go into Google and you type in IBR application, you can get a PDF version of the application. And in the first section, you choose that you're applying for a new income-based repayment plan. You don't say that you're trying to switch or anything like that. You say that it's new. And then you fill out that document, you upload it onto your loan servicer's website. And we've seen that being processed within like 2 to 3 weeks. So that way people can start back on repayment. So we're all good there. Okay. So what's going to happen and what should you do now that this is going back to the lower courts? I still say go on IBR if you can. And I'm going to touch on that, what that really means to people's finances in a minute. And maybe if you're on pay as you earn already, still keep staying there because we should know in the next few months what's really happening with pay as you earn, like what happens when you switch, all that type of stuff. So there's no reason to switch yet. If you're on public service loan forgiveness, you're good. However, based on kind of just what's happened over the last few days, before I said I'm about 50-50 on if what's going to happen with pay as you earn. Are they going to get rid of the forgiveness on it? Is it going to stay? I'm starting to lean more towards pay as you earn is not going to have any forgiveness associated with it. So we'll see where that comes out at. Now, this is one of the big financial topics because I have been seeing this in the Facebook groups. We've been getting this on the phones at FitBucks, like when we're helping people with their financial plans. People saying, like, I'm not going to be able to afford income-based repayment plans. And especially true with old IBR. So some of you guys that are older borrowers that have loans that only qualify for IBR for old borrowers, like your payment is going to go up pretty drastically. Like I just talked to somebody today that their payment is going to go from $300 a month up to $1,100 a month. Okay. And if you are sitting there, and this is, one of the big quote unquote awakenings. And I hope I don't say this like bad and people get like offended by this or whatnot, but now's a very good time to sit down and look at your finances if you're having to switch. And if you're saying, man, like I'm not going to be able to afford this higher payment, just to be honest, you have financial problems and they're not student loan related. This is just one piece of your financial problem. And I'll explain to you what I mean by that. I'll go with IBR for old borrowers because that's the higher payment. Okay. It's not even based on your gross income. It's based on adjusted gross income, which they adjust for the poverty line. And so what ends up happening is that instead of it being 15% of your of your total income, it actually most of the time comes up to like 8 to 12% of your income going towards your student loan payments. Now, let's be honest. Okay. If you can't afford 8 to 12% of your income to go towards student loans, you have a financial problem. And now I know a lot of people are hurting because of cost of living going up with inflation, and I'll touch on that in a minute. But I'm just referring to those of you that aren't, necessarily you were hurt by inflation, but you still have enough money. It's just, again, what are we spending our money on? Subscriptions, other debt, all that type of stuff. The moral, like the point of the story of that is not to attack anybody, but to say now's a great time to say, holy crap, this is an awakening. I need to really sit down and look at where my money's going and basically have a heart to heart with yourself and say, do I really need this? Do I really need that? Do we need to downsize this? Do we need to downsize that? And really get a grasp on your finances. And we don't see this type of problem happen that often for people. One of the times that I've seen it was in the housing crisis. That really caused people to really sit down and say, hey, what's going on with our money? Okay. And now this is an opportunity to say the same thing. Now, for those of you that are saying, hey, look, cost of living, I literally can't afford this. I completely feel for you. And I'm going to tell you something that most people in finance don't ever talk about. Like most people in finance, they talk about cut, 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 cut. So like the Dave Ramsey's of the world and whatnot. Cut your expenses here, cut your expenses there. And the reality is you can only cut so much. And at some point, you still need to eat food. You still need to have shelter. And some of those basic expenses are killing people right now. So the secret there, what you want to examine is, yes, see if there's any low hanging fruit on expenses that you can cut, but really focus on your finances and look at your income. Is there a way that you can get a higher income within the job that you're in? How can you go and present something to your boss to get paid more? Is there skills that you can learn? Is there side hustles you could do? What can you do to increase your income? And so that is one of the big areas that I wanted to touch on because that's what we see constantly, and that's some of the questions that I've been getting leading up to this live chat was, well, what happens if we just can't afford those monthly payments? And it's like, well, use this opportunity to really take a look at your finances and say, what do I have a problem here doing? Um, and I'm going to answer some other questions that we've been getting throughout this week leading up to this. If you guys have questions, go ahead, feel free to put them up in the chat box. Let me make sure. Blah, 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 blah. There's a few of them in here. Um, what's going on with consolidation? That was one of the questions that we got. Why is that a big deal? Prior to the Biden administration, if you consolidated your loans, you restarted your payment clock. They put this like waiver in that you can consolidate. That waiver is expired. So if you consolidate your loans now, you're restarting your payment clock. So don't do anything on consolidation. But a lot of people have been scared, like, hey, I consolidated before to go into save, but I was making payments for the last like 5, 6, 7, 8 years. So what's going to happen to those payments? We don't know. We think that it's going to be okay because we don't see that as of now being challenged in court. It hasn't been brought up, but you never know. Okay, so that's definitely something to keep an eye out on. Again, what happens if I'm on PSLF? This doesn't affect PSLF. Just like even the stuff with pay as you earn, they're questioning what happens at the end of normal loan forgiveness, not on PSLF. So if you're on PSLF and you're on pay as you earn, you should be good to go. Okay. Then yeah, this was we just got this good timing. This is one of the questions I've been getting all week. I just got it again in the chat too. How likely is it that hospitals will be reclassified as nonprofits and thereby cut off from PSLF for many healthcare workers? Now, this takes more quote unquote political analysis. It has been bipartisan to change PSLF. And what do I mean by this? Okay. In 2008 or whenever they rolled it out, I believe it was 2008, 2009, when they rolled out public service loan forgiveness. The concept was, hey, people have low incomes. They have to, they're taking low incomes. They serve the community, forgive their student loans, and we need those positions. So throughout President Barack Obama's term, Democrats were starting to complain that too many high income earners were getting their loans forgiven through public service loan forgiveness. And I know a lot of you on here are PTs, OTs, SLPs, NPs. You are considered high income because you're in the upper echelon, in the upper percentiles of income in terms of salary in this country. And so the way that now it might not feel that way because you have student loans, right? You have this, that, all these different things. But that's not the way the government and politicians look at it. They look at it on averages, medians, percentiles. You're high income for them. And so what they had proposed, what Barack Obama had actually propose, I believe it was in the last year or two of his presidency, was to actually cap student loan forgiveness at $58,000. So like if you had $150,000 in loans, you can only get 58,000 of it forgiven. You still owe the other whatever that is, 90,000. Okay, that bill went nowhere in Congress. So that's why it wasn't changed. Now you fast forward to the question today. Well, what happens if they change the status of a nonprofit? Again, it's going along the same route. What Republicans are now saying are, why are people like MDs and those higher income individuals, even yes, PTs, NPs, PAs, all that type of stuff, why are they getting their loans forgiven? Like they should be able to afford this. Okay. So Democrats and Republicans are both saying the same thing. Now, do I think that that means that something's going to happen to PSLF, like especially with this, where they change, reclassify the hospitals and nonprofits? Do I think that's going to happen in the next 4 years? No. I even if there was a fantastic idea they came out with, I don't see Democrats in Congress supporting anything that President Trump comes out with. Period. And so they would have to have majority and like super majority to change this, and then it's gonna ruffle some feathers. So I don't see it hospitals being reclassified anytime soon. Again, I could potentially be wrong on that, but for now, I would not be too worried about that. Okay. Another question we got: what is happening with PSLF buyback? I was on save and only had 7 months left, but have been on forbearance. I applied for buyback and haven't heard anything. So I mean, for months, for like 6 or 7 months, there was like nothing happening underneath the Biden administration. Over the last 3 weeks, we have seen tremendous amount of movement underneath like the new administration in terms of things getting forgiven and stuff moving along. So that's the good news, is a lot of stuff has been being forgiven. What does that mean for buyback? Again, that's not potentially being challenged in court, so maybe that can go through. What we've been recommending to people is, yes, put the buyback in there. However, you only got 7 months left, so try to go on IBR and actually just start making those 7 months of payments. And then, if you overpaid or whatever during that time period, once your loans are forgiven, fight like hell to get a refund. But for me, like, and my money, I'm like, look, I'm 7 months away of getting tens of thousands, if not hundreds of thousands of dollars forgiven. I'm not waiting around for the government to decide what the hell they're doing. Like I'm gonna do what I need to do to get on a plan to get this thing forgiven, and that's IBR. And for some people, it might be a little bit more expensive. You can even potentially write in your income and just say, hey, this is what my income is, so that way the payments aren't too high. But I would, like, if I'm in that situation, I'm going on IBR. I'm not waiting for buyback and all this type of stuff. And if buyback happens, fantastic. But I want these months counting, and I'm that close. Like, get me out of this thing. That's the way I personally look at it. I know a lot of other people have been saying, yeah, wait for buyback, like see if it gets processed, like it's not costing you anything. You can't go that route. Again, I just would want to get that paperwork in my hand saying, hey, congratulations, like you got your loans forgiven. So that's typically the way I lean on that. So yeah, good question on that. You know, I got this one this week too. Basically, it was a chat in one of the Facebook groups blowing up Republicans about wanting to get rid of IBR and how much they suck and all this type of stuff. And so I'll bring up that question or that statement now. This isn't politics or saying one way or the other. I just study politics because I'm an investor at heart. So I was trained 25 years ago to really dive into politics because politicians sway investments and impact companies by so much. And so I look at this and I look at these statements and I look at it, just it's ironic. Like it's just massive irony. And what do I mean by that is these income-based repayment plans and PSLF and that type of stuff, they wouldn't even exist if it wasn't for Republicans. Milton Friedman, those of you that don't know who that is, he was an economist, considered a right-wing economist, whatever they classify these guys as, like how they classify him, I have no idea, but he's considered as a right-wing economist. A lot of people were basically say like he was the economist that President Reagan followed a lot of. long story short, I don't remember which book it was in or when he published it. It was sometime in the 50s, 60s, or 70s. I think it was in the 50s or 60s. But his idea for higher education was income share agreements, where you paid a percentage of your income for basically life until what you borrowed was paid off. And he argued that that was the best system because degrees and whatnot would then be naturally priced and be transparent in terms of salary potential to students. And that society would naturally progress to funding what we actually needed through that arrangement. And if salaries weren't there, less people would go into those professions, and then in turn raise salaries for the existing people in those professions because supply and demand, all that type of stuff. Anyways, that was the whole concept of them. And so in 1993, when they started working on these things with the income contingent repayment plan, what they did was instead of actually building an income share agreement, they tried to fit that idea into the existing system, which was a loan. And so they came out with income contingent repayment, which is the kind of like I call it a Frankenstein type of concept where it's like, well, here is a loan and here is an income share agreement. Let's merge the two. And for a long time, and even to this day, a lot of Democrats will complain that that it's indentured servitude, right? And that's their argument against it. Well, what ended up happening underneath President Obama was Democrats started looking at it and saying, well, wait a second, we can actually use these things for socialized education. Okay. So, this is not me saying this. Those of you that listen to the podcast, a lot of you guys have heard me talk about this in the past, but I'll reiterate it here. Like senators like Bernie Sanders, Bernie Frank, sorry, Bernie Sanders, Elizabeth Warren, they're not shy about this, right? Like they want socialism. And the way you do that, and I'm paraphrasing here, I'm simplifying this, but socialism is basically like, okay, well, use money from here to pay for this over here, right? The thing about that with student loans and the way the student loan system has always worked was, okay, well, your graduate level students, I call it the graduate tax, like they pay, like they don't default on loans. And so if we could charge them more, we can use that to subsidize undergrads and have quote unquote free education for undergrads. So that's always been the long-term goal. So what happened underneath President Obama is when Democrats started realizing this, they said, well, wait a second, like we can use these income driven repayment plans to our advantage. And we know the Republicans wanted to do XYZ, but let's use this to our advantage. And so they began coming out with policies. The first one was pay as you earn for that. But then what they realized was, oh crap, like if you file separately, like a lot of people that are married, have dual incomes, they want them repaying their loans too. And graduate students. So it's like a married graduate tax, if you want to call it that. They said, oh shit, like people are filing separately and getting around this. So President Obama changed pay as you earn to revised pay as you earn. He did two things in that. He lengthened the term from 20 years to 25 years if you were a graduate student. And then he made it so that way you couldn't file separately anymore. It was always based on dual incomes if you were married. Why? Because they wanted that money to subsidize individuals. And that's really what SAVE was doing too. If you actually look at SAVE, it was a massive benefit to undergrads. And if you're actually on pay as you earn or the 20-year IBR plan, going on to SAVE for like 80% of people was not a good idea just because those extra 5 years would cost you a ton of money on SAVE. But that's why they extended SAVE 25 years for grad students. And so, like I said, like this, it's just ironic to see what's going on because a lot of people are blaming, Republicans for this. And it's like, well, first of all, like I said, if it wasn't for Republicans, income-based repayment plans wouldn't even be there. In fact, you would be having to pay on a regular standard plan or a graduated plan still if it wasn't for these plans, which would be even more expensive than the income-based repayment plans, is it if they didn't exist as they were. Okay. So yeah, a lot of people don't realize that. That's why when I look at some of these things, I'm like, wow, that's kind of ironic. Some of that stuff. We did have some questions because when I did post this, I had mentioned this too about like investments as well. I will touch on some of that stuff. Just a real quick one, but I primarily wanted to touch on that front is you can still contribute money to a Roth IRA for 2024 if you had earned income. Do that. We highly recommend it for all new grads coming out. making sure that you put money into a Roth IRA. If you are on an income-driven repayment plan and you're filing separately, you can still do so through what's called a backdoor Roth IRA. You just have to make sure you don't fall underneath the pro rata tax law. If you guys don't need, um, if you guys don't know what that is or want help, obviously contact us, fitbucks.com, sign up for, our financial planning membership. No, we don't charge like $4,000 a year. It's actually $18.99 a month. We can help you walk through all that stuff. But making sure on the investment side of the world, make sure you're doing your Roth IRA, make sure you're getting your match in your 401k. In terms of investments going forward, I was going to put out a newsletter and some information going forward because there's a lot of bad news coming out, trickling over the last through December and January. Things like credit card defaults, car loan defaults, they're all spiking. They're all very high, which is not a good sign. But again, when we're talking about retirement investments, we're not trying to time the market. So it's just just keep dollar cost averaging. That means just keep putting money into certain things consistently, and just make sure that your ability to take risk matches your actual investments. So again, if you guys need help with all that, just let us know. We can help you with the investments, the student loans, financial planning, mortgages, all the above. So let us know. Some more questions. Another question. I don't mind paying back what I've borrowed. What hurts me is the predatory compounded interest that continues to accrue. I pay more than monthly payment and barely touch principal. Is there any advice on that? Yeah, there's a couple things. First off, I always joke around with predatory lending, especially when it comes to like Elizabeth Warren. Yeah, I'm picking on her on this one. She always is attacking predatory lenders. To me, the government is one of the biggest predatory lenders out there. Actually, they are the largest predatory lender. But it's not because necessarily the interest rate. It's because of giving the loan without underwriting it and just saying, yeah, here's money. Go get your degree, right? Like go get your degree on, I used to say, with no insight into, hey, should you be borrowing this? Like, this is the income you can expect. Does this financially make sense? I mean, think about this. If a mortgage lender just said, hey, look, everybody gets $500,000 to buy a house. They don't look at your income. They don't look at your credit. They don't look at anything like that. They just gave it to you. Would that be smart? Would that be predatory lending? Well, that's what they did in 2000 from like 4 to 2007. And guess what? They were labeled as predatory lenders when everything came crashing down. Well, it's like the government does the same thing. So I think it's predatory lending because of that aspect of everything. In terms of interest rates, it's also, I mean, when you actually look at it, it's from a statutory standpoint, it's not predatory because these are actually personal loans, meaning they're guaranteed by your future income, not by an asset. And so if you actually look at personal loans, the interest rate should be actually between like 10 and 20%. But what I would personally like, before I answer your question, sorry, I went off on a tangent. What I'd personally like to see is that the risk is primarily going into school for the government because they don't know if you're going to be graduating or not, or if you might switch degrees, if you're an undergrad, all that type of stuff. So it should be where it's like, if you're an undergrad, the interest rate, let's just say, is 12%. And if you're a graduate student, because there's less defaults there, your interest rate going into school is like 8%. And once you graduate, there's an automatic refinance to have a lower interest rate. And actually, Republicans in early January, they put together a bill to do that. They were going to have where interest rates would drop. Either they were already this or they would drop upon graduation down to 1%. Obviously, that bill went nowhere because they can't get anybody to support anything in Congress. But that's what I would personally like to see. Now, in your your question about compounding interest, all that type of stuff, making the principal payments. Yeah, there absolutely is. And the best way to do this is actually dropping your required payment. And you can do that. The easiest way is through the extended standard plan. I say easiest because it's just simple. You don't have to worry about anything else. But when you do that, your required payment drops and that frees up more money. So then you can take extra money and make prepayments. And then you can target specific loans to that like high interest rate loan and pay those off faster. So that way you pay less interest over time. And it's a great way to go. Now, the other thing you can do, those of you that are a little bit more, savvy or more understand how these numbers work, you can also use IBR or pay as you earn and base your payments on your income. So let's just say your payments drop to $300 or $400 a month. Let's just say you had like a 4% undergrad loan and a 7% graduate loan. What you do is you basically let the interest accrue at 4% on your undergrad loans, and you make big, huge payments towards your 8% loans. In essence, what you're doing is you're borrowing at 4% to pay off your 8% loan. So net, it ends up being actually a really good strategy. That's a little bit more complex because there's a lot more moving parts. People ask me all the time, like, how would I pay them off the most efficiently? That's the way I would do it because I understand the mathematics behind it and what's going on. But if you're trying to keep it simple, just use the extended plan. The other way too is to look into refinancing. You don't have to refinance all your student loans. Like if you just want to refinance the higher interest rate ones, you can. We're seeing about 5.5% to 6.5% rates right now, so not the best, but that's one way, and keep your eyes out on that. But yeah, within your federal loans, looking at it and saying, what can I do to reduce the required payment? The other trick that you could do, it's not really a trick, but it just works with any loan, is the more often you make the payments and more frequently, the less interest is accruing between payments. So more goes towards your principal. Um, so, trying to make payments like twice a month instead of once a month and doing it more frequently, that can sometimes help too. The reason why sometimes I shy away from that with student loans is because the loan servicers suck in terms of tracking things, and they make mistakes on that all the time. So I tend to try to keep it as simple as I can with the loan servicers. So yeah, hopefully that helps. Um, some other questions we got. I'm currently on pay as you earn, but my current student loan balance is increasing despite me paying monthly. Yeah, that's because you're not paying the interest. So when you're on pay as you earn or income based repayment for most of you, you have what's called an interest charge on your loans. So let's just say I borrowed 150 grand, my interest charge would be right around $800 a month. So if my monthly payments are $400 a month, that extra $400 of interest that I'm not paying gets added on to my loan balance. So your loan balance won't go down. Um, and then if you're on IBR, the way they work is after 20 years, your loans are forgiven and you don't have to pay that interest that accrued, but you have to pay a tax on the forgiveness amount. That's the way pay as you earn was understood to work, but that's what's being challenged in court right now is, are your loans forgiven and you owe a tax? Or at the end of the 20 years on pay as you earn, do you stop payment, but you owe the full balance? That's what's being challenged right now. And that's why, I'm highly advocating to a lot of people, potentially switch to IBR and whatnot, but everybody's situation is different. So, I don't want to put a blanket statement to that. Be sure to schedule a call with, your FitBucks expert, and we can walk you through like your personal situation on that. But that's why your balance is increasing, is because your payment is not enough to cover the interest. Now, should you pay more on the loans? If you're going for loan forgiveness, no, just keep saving for that tax and saving for your other goals. But if you're paying off your loans and you want to aggressively pay them off, then yeah, that's where you would pay extra. So, good question. Another question: as a newly graduated student, PT, congratulations! I was at CSM last week. I know I saw a lot of you. So I've gotten all the documentation to begin PSLF, except for getting approved for an IDR plan. Would you suggest applying for the IBR and getting started? Yeah, absolutely. Might as well get that clock started. IBR is the route to go. If you just graduated, chances are you qualify for IBR for new borrowers. So that payment would be exactly the same as pay as you earn. Get on that. Don't get all caught up with this save stuff. Just get on IBR, start that clock going, and go from there. I got a question off of YouTube. It was actually on Facebook. Somebody saw me put my hand up. They're like, "What's on your hand?" I had stitches on the back of my knuckle. I cut the back of my. I don't even want to show you guys because it's disgusting. But I cut the back of my knuckle and had stitches on it, and I kept ripping it back open because I type so much at a computer all day long. And so I put a makeshift splint out of a popsicle stick on it. So that's what's on my fingers. So you guys are paying attention to details on that if you caught that. Next question: will consolidated or refinancing affect PSLF eligibility? Yeah, absolutely, it does. If you refinance, you're in a private loan. Private loans do not qualify for public service loan forgiveness, so absolutely do not refinance them if you're going for public service loan forgiveness. That is a big, 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 big no-no. Consolidation, that's a whole nother issue. As I touched on a little bit earlier, if you had like 4 years of repayment and then you consolidated because like you wanted to go on a different plan, that restarts your clock technically. Um, so you'd want to refrain from consolidating. If you're a new grad and the loan servicer is saying, hey, to qualify for this for IBR, you could consolidate and then go on it, then that's a different story because you don't have any payments yet. So you could go on, consolidate it, and get on it. However, right now, those cases where that works are very few and far between. Most of you would qualify for IBR, pay as you earn, as is. So just do that. You don't need to consolidate. It's just when you consolidate, it can potentially open up a whole other can of worms, which is a whole other headache. So if you don't need to, we typically say don't. And so if you don't need to consolidate, again, I would shy away from that and not consolidate. Okay. Blah, 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 blah. If you qualify for pay as you earn on PSLF, would it make more sense to do pay as you earn instead of IBR? It depends. For many of you, the payment on IBR and pay as you earn is exactly the same. If that's the case, why risk it? Just go on IBR. For some of you that only qualify for IBR for old borrowers, the payment is going to be probably about 30 to 50% more than pay as you earn. So if you find yourself in that case, then yeah, you could stay on pay as you earn or go on to pay as you earn. But just keep an eye out for these court rulings over the next few months. Because again, the stuff going on through pay as you earn on the courts, we don't see it harming PSLF, but you don't know. It could potentially do it. You never know what's going to happen with some of these court hearings. But yeah, PSLF, you should be all right on that. Next question was, I was under the impression that I had to consolidate all my loans in order to qualify for PSLF. So that's what I did. Was that wrong? It depends when you did it. So first of all, you do not, in order to qualify for public service loan forgiveness, you do not have to consolidate. That is not a prerequisite. What happened is that a lot of people, when President Biden rolled out this SAVE plan, because when they took their loans, they didn't qualify to go on to SAVE. And so President Biden and the Department of Education wrote a special rule saying if you took advantage of what's called the IDR waiver, that you can consolidate your loans into a new loan, keep the time that you've already paid, and then go on to SAVE. So there's a lot of confusion. Like if you called your loan servicer or went online and asked the question, there was a lot of confusion of people saying, yeah, you have to consolidate to go on to public service loan forgiveness. That wasn't the case. The case was you had to consolidate in order to go on to SAVE for a lot of people. And so that's what they did. Now, are those people in risk of losing some of those payments because they consolidated? Like at this point, we don't think so because we haven't seen anything in the court case that is fighting that, but you never know what's actually in the court case. If they come back out and say everything that President Biden did was against the law, then that could be one of them, and it's going to be really sticky on winding all that. But as of right now, we would say that it's okay. But yeah, going forward, you don't have to consolidate your loans in order to go into public service loan forgiveness. It was just that one special case underneath President Biden, that he did for a few months. That's no longer there, but that's why people were getting confused saying that. If you made payments and submitted your employment certification and FSA approved those payment counts, could they ever go back and retroactively uncount them for any reason? No, they count. The form was submitted. That form that you just brought up, I always recommend sending about 2 or 3 forms like that every 2 to 3 months. Just keep filling it out and sending it in to make sure that you're getting count. I've seen loan servicers mess up the count, like it being too low and then adjusting it up. I've never seen them adjust it down. So yeah, once you have those payments, they should count. For those of you that don't know, on studentaid.gov, they actually recently released a counter of how many months you have kind of towards forgiveness. It does regular loan forgiveness, so that's pretty cool because that's a new feature. And then it's public service loan forgiveness. I have heard from a lot of people where they are scared because they go on to public service loan forgiveness and it shows a really low amount, even though they've sent in like certifications. It's probably just because they haven't processed it yet. So you just got to give them some time. Typically, it takes them like 2 to 3 months to process those forms. So give it some time. It should update. If it doesn't, just keep sending them in, filling them out, sending them in. Okay. Did get a question about that in the group the other day about what about the electronic version of that form? The electronic version is new, so we don't have very much feedback on it. Meaning it's working, it's not working. So I typically say use the printed version because we know that that works, and then upload it. So that's the way that I tend to ear towards because we just don't have a lot of data on the electronic form so far. So yeah, good question on that. So I haven't made any payments towards PSLF yet. I consolidated before, so now going on to IBR where consolidation hurt me. No, it won't. Like you've never made any payments. What happens when you consolidate it, it's considered a brand new loan. And so what ends up happening is that if you were in an old loan, you were making payments and then you consolidated, it's considered a new loan. So that repayment count starts at 0 again. So if you've never had any payments before, you're good. It doesn't matter. It's just a new loan and you're entering repayment just like you would if you hadn't consolidated. So yeah, good questions on that. So that's, primarily what I wanted to go through because especially as of Wednesday, there's a lot of question marks about what this is. And I've seen a lot of headline news, a lot of fear mongering out there. Like, the Department of Education is going, away. And actually that reminds me, because I did get that question. What's going to happen if the DOE goes away? Well, they spend like $61 billion and they still can't do their job. So is it a bad thing? That's what I always say, right? For you guys that are on this, for student loans and student loan repayment, it's not going to harm it at all. Like from what I've heard, rumblings through the people I know in Washington D.C. is that if it does do away with the Department of Education, the proposal is that it goes to the Treasury Department. Because the Treasury Department is actually responsible for money going in and out of the government. So when you actually think about it, student loans and student loan repayment should probably already be underneath the Treasury anyways. Why is this underneath the Department of Education? Who knows? But that's what would be happening. So all this stuff about the Department of Education going away, it's not even that it's going to go away. It's like the functions that it does. The primary argument is that the functions that it does are repetitive and that there's other agencies within the government that would be better at doing that job more efficiently. So the primary argument, now, of course, you're not going to see this on TV. They're not going to talk to you about that stuff, but that's the main argument that I hear, and that these different things would then be pushed to different areas of the government that already exist. So that way it's just be more efficient and be handled by departments that actually focus on some of these things. That's the rumor that I've heard. So yeah, we'll see. And actually, yeah, I did get that question right now in the chat too. Like, do you think the Department of Ed will be dismantled by Trump? If so, what happens to the loans? Again, if it is dismantled, which personally I don't think it is going to be dismantled, because how many people in Congress actually have to vote for it, to pass it? We'll see. But even if it is dissolved, I tend to look at things and say, is that really a bad thing? Primarily because I look at what they're doing with student loans. I know they do a lot of other stuff with like lower like grants and all that type of stuff. But again, those are different functions. I'm primarily focusing on loans, and their handling of the student loan repayment system has been an absolute debacle. Like it's horrible. So is it really that bad if it goes to the Treasury? I don't know. Now the Treasury can't even report where money's going at. So, but that's a whole other topic, right? But that's kind of my viewpoint on the DOE. Even if it goes away, for most of you, it's not going to affect any of you. So I wouldn't worry about it too much. So, So when tracking PSLF, do you recommend saving documentation every payment or yearly? Yeah, absolutely. Actually, I'm glad you brought this up because something that wasn't made too public, this happened a few weeks ago, maybe a few months ago now. They were changing systems and they lost payment count for a lot of borrowers. And we always say that if your loans are switching servicers or you get a notice from the government saying they're about to upgrade their system, always take screenshots of your stuff and store it. So that way you have evidence of it because the minute that they do that and those counts go to zero or something happens, they're gone. I just worked with somebody, they called in their FitBucks member. They called in about 3 days ago. They scheduled a call and their loans had been transferred. I forgot which loan servicers, but they had been transferred loan servicers and they lost the payment count and they have no evidence of the payment count and either does he. So how do you prove that you had made those payments? Like literally there's no proof that he even made payments. And so he's having to go through trying to get like bank statements showing like withdrawals from his bank. It's a freaking mess. And so I always tell people like have a folder on your computer, take snapshots of your loan payments, your counts, all that type of stuff, keep them there. And by the way, we're so technology dependent as just as a society nowadays. I recommend doing the same thing with everything in terms of like mortgage payments and car payments and all that type of stuff. Just take screenshots when they send you statements, save those statements in your own folder on your own computer or a backup drive or a cloud service. So that way you have proof of them because if you don't, and like let's just say you're making car payments and the lender doesn't upgrade on their system and they lose everything, you got to prove payments. This was actually something we thought about this years ago at FitBucks. We haven't done it yet, but we're thinking about bringing it back. And we did it for a little bit, and then we stopped because of security purposes. And then the company that we partnered with to do this, they got acquired. We didn't like the new company, so we stopped doing it. But we were actually, as on your membership page, is going to give the ability for people to upload those documents so they have a place to store them. So yeah, we might bring that back. I'll make a note of it right now. Like some of you are already actually messaging me, like as I'm saying that, like, can you bring that back? I'll make a note of it right now on the live chat to potentially bring that back in. Let me make a note real fast. So yeah, that was actually a really positive like feature that we used to have, and then we took it down because of that, and that's why. I know you guys pinged me in the past, like, why did this go down? It's like, well, that's why. But we're actually working on a number of different AI things right now that can do document reading. So that's why I also we're thinking about bringing it back as well. It's just a pain in the butt storing it because you have to have a lot of those documents have things that you don't want out right to public. So storing it, and when you store it in a secured vault, having like AI and like even human experts that we have on the phones, getting them access to those documents can be a pain in the ass. It's really difficult. So that's why we're trying to figure out what to do there. So good questions. Another question, could you discuss the time in IDR approval when submitting manually versus FSA online tool? So typically either way is only about 2 to 3 weeks. What we've seen recently when you use the online tools is just not being done. Like it's just they're not doing anything. I didn't share this a lot on the podcast or YouTube channel. By the way, those of you that are subscribed to the YouTube channel, please do so. We come out with news and stuff all the time, so subscribe if you get a chance. I alluded to this in some of the stuff where I'm like, I used to say, like, guys, like, if you're expected, like, do this, like, change now, do this, like, don't wait for the government. The reason why I was saying that starting in August is that I had an inkling that the Biden administration was not going to be processing anything, any new IDR applications, any switches, because they were primarily concerned with trying to get as much PSLF buyback and IDR waiver forgiveness as possible because the DNC is gearing up for midterms in 2 years and the presidential election in 4 years. And one of the things that they're going to want to try to run on is see how much, we forgave. Like we told you we were going to forgive loans. We forgave this amount, remember? And sure enough, that's what they did. And I confirmed that with some people I know in the DOE around like October time period of last year. They basically just said, we're not processing anything except for IDR waivers and PSLF buyback. And I know some people asked about buyback earlier, like they've been waiting. They were trying to deal with the backlog. And I think they got through like September or October before President Biden left office. And that's all they were processing for that purpose. And sure enough, if you actually go back into announcements, like presidential announcements, I think it was on January 19th, like President Biden's last announcement was talking about how much in loan forgiveness that he got done, and because that was their only concern. So I have not heard anybody, even under once Trump has taken over, that has did stuff through the FSA online tool and got it processed. The only people that we've heard about getting it processed is paper applications, and it's not. I shouldn't say paper because you don't have to print it off. It's a PDF. It's a fillable form. You save the fillable form, and then you upload the fillable form to your loan servicer, so you don't have to print anything off. And by the way, I should clarify. This is for people trying to switch plans. I have had some newer borrowers that have elected that use the FSA online tool, and because it's a new application and they select IBR, like it's been working just fine. Pay as you earn, we've heard, is starting to work again as well. Where we see people running the problems is that they select save as a new grad, and they're just put in the what I call forbearance hell right now, where nothing's counting. The only time we recommend doing that is if you're a new grad and you're just trying to, like, hey, look, I want to use these 12 months to get a little bit more established. I want to have my emergency fund. Maybe I have high credit card debt or car debt that I need to pay off, so I'd rather do that. So you can go on save and take advantage of that forbearance for the time being. But again, those are individual situations that we would take a look at and say, hey, what makes sense for you to do on that? So, yeah, one of the comments just said, when I use the online FSA tool, it was an expired form, and you had to download it, the one that expires in 2007. I'm not shocked. Again, it's been such a shit show that, yeah, I like saying, hey, what's working? Let's stick with that, which is the downloaded form. That's what's been working for borrowers. That's what we've been getting reports back on. A number of different people I know in the student loan industry, they've been saying the same thing about that. So, that's why we say use the downloaded form. It's been working. So good stuff. I think that's all the questions that we got. I'm trying to go through any of the stuff from like Facebook that I had earlier this week. I think I went through everything. The big part is, again, if you're on pay as you earn, like, I hate to say it, but we got to keep our eye out. Like, is this stuff going to get forgiven in 20 years if you're on pay as you earn? That's the biggest question mark that I have right now. And as I mentioned earlier, I hope that each one of you are using this as kind of a wake up call. Like, if you're not able to afford those payments, like on IBR, really look at your finances and say, what do I need to clean up here? What do I need to get on top of, and use this as a time to really do so. And again, that's really important. I'm actually going to come out with a podcast and YouTube video on this probably in a few weeks. One of the biggest problems that we see is that people have these issues and then they just start making payments, like let it be on car loans or mortgages or student loans or investments. And they know they need help, but they don't get the help. And then it becomes habit. And they never change that habit for 10, 20, 30 years. And they just never get in a good financial situation because they get comfortable and there isn't a problem. Well, here's a problem. Use it to react and say, I got to do something about this. And don't just say, okay, well, great. Now I got this higher IBR payment. I'm just going to I got to pay it. And then 12 months later, you're just comfortable doing it. That's all you do. So we did get one more question. Once you fill out the paper application for IBR, where do you upload it to? You should upload it. There should be a place on your loan servicer, let it be Mohila, Nelnet, whoever it is, to upload the documentation. It's different on each company, and they change their websites all the time. So it's hard for me to say, yeah, do it here, do it here. But it should be on the loan servicer's website. So good question. But we are running up on an hour on the live chat. I had fun time doing this. If you guys think we should do more live chats just on any financial topics, let me know. I'll be more than happy to do it. We did get one more question that I can answer very quickly. Could repay plan, come back in the future? No, that's gone. Repay is gone for good. It's not coming back. I can guarantee you that. So, and yes, they do still have the standard plan. They have the standard plan, the extended standard plan to pay off the loans. Those are all still there. So those are the main repayment plans. So as always, thank you guys. And if there's a topic you guys want us to do a live chat on, ping us, let us know. Put it in the comments on YouTube. Put it, ping us on Facebook. Shoot us an email. info@fitbucks.com. Be more than happy to do this with you guys. And as always, it's been fun, and we will talk to you soon. See you later.